How did the governments or the people that control this money get to do this? We've got to go back to the future. So let's go all the way back. And it's the story of the goldsmiths. This is how banking started. The goldsmiths were the ones that minted the coins. So back years ago, what would happen is people would trade their gold and silver coins in the marketplace. And it worked great. And the goldsmith, he would obviously coin those and do that in the marketplace for them. The goldsmith had vaults. So they would produce the coins or mint them for the people in the marketplace, and the people in the marketplace would use those as money out there in trade. What happened was then is you fine citizens would hold the gold and silver, and then you'd want to store it. You didn't want to store it at your house. So what you did is you knocked on the goldsmith's door and said, listen, we know you got vaults there. If we pay you a fee, can we store our gold and silver in your vaults? And the goldsmith goes, sure. I'll charge a small fee, and you can come and store your gold and silver in the vaults. Worked wonderful. So now all of a sudden, the goldsmith's gone into the vault renting business. Then the goldsmith, what he started to do is loan out his own gold and charge an interest on it. Now, let me back up. The depositors, which I'll call you guys, that have deposited your gold in the goldsmith's vaults, if I'm the goldsmith, I give you a claim check or a piece of paper or a receipt that says, yes, Mrs. Jones, you've got 5 ounces of gold stored with me. And yes, Mr. Smith, you've got 1 ounce of gold. That's called a claim check. That means you can come back and knock on my door and you can claim your gold back for the receipt. Borrowers would come in and want to borrow money. So what I did is I had my own gold. So then I would actually loan my gold out into the marketplace and charge a small interest on it. Things worked fine. What I started to notice as time went on, that the claim checks that I'd issuing to people, I'll call you guys would start using these claim checks as money in the marketplace instead of the physical coins. It was easier. So what I started to notice as a goldsmith is I started to notice that, these guys never ever came in and claimed their gold. They were just trading their claim checks out there in the marketplace. So what I did is I got a bit sneaky. I thought as long as they don't come and claim their gold, they're none the wiser. So then I started lending out their gold on receipt to borrowers and charging them an interest on it. So I started to get a little wealthy. And time went on and I got a little bit more wealthy. Until you guys woke up, and because I was flaunting my wealth, so you guys come in and said, I'm going to pull my gold out of your vault. And I said, don't do that. I'll cut your deal. Here's the deal I cut. Instead of you paying me a fee to store your gold, how about I pay you a low interest on depositing your gold in my vault, and I'll re-loan it out at a higher interest, and I'll pocket the spread. This is the start of banking. This is how banking came about. You guys now are happy because now you're making a low interest rate on your gold instead of paying me a vault fee. I'm happy. You're happy. I'm making more money. What starts to happen then is these claim checks get so prevalent out there in the marketplace and economic expansion starts happening, so I have more borrowers come and knock on my door. And I still realize that you guys never come in and claim your gold. So what I started doing is writing claim checks on gold that doesn't exist and charging interest on gold that doesn't exist. And I became very wealthy very quickly. So wealthy that what happened was that when countries went to war, as you heard before, they need to fund that. So guess where the King of England or the King of France or anyone else came to knock on my door? They wanted to borrow the money. So what I did is I said, no problems. So I loaned them claim checks on money that never existed, charged interest on money that never existed, and secured it with real land and assets, and I wanted a guarantee by the kings to make sure I'm paid back. And they said, Mr. Banker, Mr. Goldsmith, how do we guarantee it? So I said, I want you to impose an income tax on your citizens. So this is what they did. This is the start of income tax. So now, both countries are in debt to me. Now, common sense corner. Let's put our common sense hat on for 1 second. I'm in the business of making money. I'm the goldsmith, now banker. Do I care who I loan? If France wants to fight England, do I lend to France and not England? No. I lend to both sides. Do I want that war to stay going as long as I possibly can? You betcha. So now I fund both sides. And I've got an each way bet, guaranteed to win. What happens out there is economic expansion goes rampant because of all this extra money in the circulation out there. Problem is this: a few of you depositors wake up to this game and you come and knock on my door and you want receipt for your gold. And I panic. So then I give you my gold and then I have to shut my door because there's no more gold. And that's called a bank run. That's when banks shut the door and you don't get paid. That's what happened in the 30s, and we came to that close in Australia in 2008 in a bank run. We didn't even know it. Banks never had your money. They don't in the first place. I'm going to explain. So, the problem is the emperor's got no clothes is if everyone comes and claims their claim check. I thought the game was up. Then the authorities knock on my door. And I definitely thought the game was up. But something very interesting happened. The authorities turned around and said, Mr. Goldsmith, now banker, we should shut you down. But look at how quickly Europe just expanded economically. We can't shut you down. So why don't we do this? Why don't we impose a reserve limit that you have to keep for every 1 ounce of gold on deposit, you can lend out 9 times that don't exist. And what we want you to do as part of the regulations is create a central bank. So if some of your smaller banks have runs on them, then all of a sudden you can pull from your central bank and fund them. Problem is, the game's up if everyone wants their gold. That's the start of fractional reserve banking. That's how banks make money today. Only it gets a little bit more complicated. These families that were the goldsmiths became the most wealthiest families on the planet, still are today. See, what I'm about to tell you tonight and show you is to expose a game that's been going on for centuries. You'll never beat the game. Don't get angry with the game. You just have to understand the rules. See, if you take the best rugby league team, Melbourne Storm, and you put that against the best AFL team, Hawthorn, who would win? Depends on the rules. Because if we play by AFL, Hawthorn's going to win. But if we play by the rules of rugby league's going to win. My mission right now is to let you know, if this is brand new to you, is that there's a game going on out there. There's a destruction of wealth going on there. Don't hate them for it. You need to know the rules of the game. When you know the rules of the game, you can play the game. But if you don't know the rules of the game, you can get financially wiped. So it's understanding how the rules of money work. And unfortunately, this isn't taught in school. So here we are now. So the goldsmiths became the bankers. The banking aristocracy through Europe were very, very powerful. How this works now is now we have what you call a debt-based money system. Money is not created by the vaults and the mints and the coinage out there. Money is created on a computer screen, and it's a debt-based money system. This is how it works. When you go and borrow money for a house and take out a loan, and you sign that loan agreement is a promise to pay the bank. Based off that promise, the bank hasn't got the money. It never did. Based off that promise, they make money up out of thin air that doesn't exist, charge interest on money that doesn't exist, and, just to sweeten the deal, secures it with your assets if it defaults, if you default. So here's how it works. The more borrowing out there, the more deposits. The more deposits, the more the bank can then re-lend out at 9 and 10 times more than they actually have. That's the reserve limit putting on a few years ago. Now some banks have got no reserve limits. In fact, Obama came out not long ago and said, you know what, screw the reserve limits. Let's just open it up. Some of the banks that went down, that were too big to fail and then got bailed out, were leveraged at 300 to 1. It's a debt-based money system. You can't blame them. Don't get angry with the game. But if you don't understand how money's created, you can lose it very quickly. So right now is if I go to work and my bank account is Westpac Bank and my boss's bank account is Commonwealth, my boss every fortnight doesn't get their bank to load up a heap of gold and truck it over to Westpac and dump it there. That doesn't happen. They're just digits on a computer screen. It's a debt-based money system. They do it through fractional reserve banking and do deficit spending because governments won't get voted in if they increase their taxes. You can't increase your taxes anymore, they won't get voted in. So what they do is they always go this way and they rob you through inflation. So you earn $100,000 a year and you bank $50,000 and you've got $50,000 in the bank, and 12 months later the purchasing power of that $50,000 is now only $45,000. And then the following year the purchasing power is down to $40,000. So what they're doing is robbing you through a stealth tax. They're like little ninjas. They come in at night when you're sleeping. It's called inflation. This is how they do it, by debasing the currency. So